7, 6, 5, 4, 3, 2, 1.
Huh. I don't know what happened there.
Yeah, that was interesting.
Little oh, there it went. It went slow.
I think what happens, Vinnie, is with our millions of followers, sometimes it gets plugged up.
It went slow.
I think what happens, Vinnie, is with our millions of followers, sometimes it gets plugged up.
There we go. Sorry with that. I had the other screen on. Oh man, technology, it's a hell of a thing. Anyways, thank you for joining us for this 8 a.m. buyer seminar. You want to get going, David?
Yeah, let's get this party started. I know a lot of you got things to do on a Saturday morning, so we want to respect you for your time, and we'll go through this a little quicker than normal today because I know it's early. So let's just jump right into it. So where to start with home ownership plans? Well, first of all, you got to look at your current job, your situation, and we know in this market that is important now more than ever. And you really got to think about this because you need your job to be stable. You need to think about your job and its future growth, opportunity of possible pay increases. Next, you got to think about your budget. Where do you spend your money? Are you saving currently monthly? Do you currently contribute to your 401k? Do you have an emergency fund? Now more than ever, look, we're in an emergency. It's a financial crisis because of this whole virus outbreak. So now more than ever, it's important to have an emergency fund. And then think about your vacations and goals. Do you still have them? What are they in the future? Because buying a home, you got to take that in consideration too. And then lastly, what about your down payment? Are you going to use down payment assistance? Do you have a down payment? Right now, a lot of down payment assistance is on temporary hold during this unfortunate quarantine. So that's something to think about. And then lastly, what's your ideal monthly mortgage payment?
Yeah, one of the things that we'll talk about more is the difference in what you qualify for and what you can actually comfortably afford. So something to remember.
How to finance your home and pick a lender. Well, there's a massive flight to quality right now as you're seeing a lot of lenders not able to do loans because their funds have been cut off. A lot of lenders not even accepting applications. And so picking a lender is super important. A couple things you can do. Step one, ask someone for a referral. Step two, ask an honest agent. Like, that's so important. It's so important to choose the right realtor and choose someone honest. And then, steps 2 and 3 is go to Yelp, go to Zillow, go to Google, go to Redfin. Look them up. If they don't exist online and have no reviews, they're doing no business, which means you're going to trust them with the largest investment of your life, somebody with no experience. And then lastly, look at their license number. Every single one of us as a lender has a license number on the bottom. It's an NMLS number. The higher the number, the less experience the person has. The lower the number, the more experience they have. So make sure you choose someone with experience.
Yeah, one thing, it's so surprising. I mean, when I talk to either homeowners, when I talk to, whoever it is, and the idea is they never actually research the person they're planning to work with. And if this is, again, one of the biggest purchases you're going to do a little research.
Yeah, I would just thought I'd bring this in here. It's like what we're talking about, it's not rocket science. But you're buying a home and you need to research out the people you're going to work with. That was my prop, Vinny.
No, I liked it. I gave a small smile, nothing too big, but a small smile.
It's not rocket science here.
Yeah, hopefully people watching didn't see me drop a little coffee while I was drinking.
That's all right. As long as if you spilled it on your lap and it's hot, you can sue the person who did that for $1 million.
Well, only if this was Seinfeld.
All right, next. Now that you have a lender, the next steps is secure your home loan. Well, this is what's called the pre-approval process. It's called a process for a reason because there's certain steps involved. We're going to look at certain things. We're going to do a loan application. We're going to look at the last 2 years of your taxes, 2 years of your rental history, 2 current pay stubs. We're going to pull your credit. Now, your credit here is something, there's a major misunderstanding in the market. A lot of people think, oh, on freecreditreport.com or Credit Karma, this is my FICO score. It's not. When we pull your credit as a lender, we do a hard pull. It's the hardest pull you can pull. I mean, it's harder than pulling a 600-pound deadlift, Vinnie, I'm serious. And it pulls your FICO score and shows everything on you. So it's important that we pull your credit. And then we're going to review everything so we can look at the best options for you. If we don't look at all the data and all the pieces of the puzzle, we can't give you the right picture that you want.
Yeah, I mean, I think this is an analogy I say all the time now. It's so funny. Is the idea that, you're like the attorney and the underwriter is like the judge, and you're trying to build a case why you should be able to buy a property. So if you don't have enough facts, enough information to make that educated case, there's no reason why a judge would actually give approval. So as more information, more ammunition that you have, easier your job's going to be, easier their job's going to be.
Absolutely. It's a team effort here. It's a team sport. You want to go over, you want to touch on this, Vinnie? Go over some of this?
Yeah. So now that the lender has reviewed everything, you share your goals with your agent. So a buyer's consultation is the next step. So you know kind of roughly what your monthly payment's going to be for your ideal property. Now we're going to dive deeper into that monthly payment, location you're looking for, appreciation of the home, future rental value of the home. Do you need down payment, interest rates? A lot of this stuff, we're just going to dive deeper and give you all the facts. And reality is just like in college, when you really only remember about 20% of what you learn, maybe you might remember about 30, maybe 35% of what you learn in the buyer's consultation, especially if it's your first time purchasing. So don't worry about that. But we're going to just dive deeper to get a solid game plan. So on the road to finding your property, you'll have more facts available.
Yeah, and we're also going to look at what's important with you. Is it your down payment that's most important to you? Is it the interest rate that's most important to you? Do you want the lowest cost to acquire the property, or do you want the lowest cost for borrowing long term? And then the other thing that is kind of unique right now, I just want to mention it, Vinnie, is buying in a unique environment like this is the future value of your home and the appreciation, because people will make bad decisions right now.
Yeah, like we talked about yesterday on our market update. So if you're not following our market update, follow our market update. Like I talked about, at the rates where they currently sit right now, your monthly payment would be the same monthly payment or around the same monthly payment of a $40,000, like a $600,000 property right now compared to a $640,000 property maybe a month ago. So don't focus so much on the purchase price, focus on that monthly payment. That's the biggest takeaway that I'd give to anyone watching right now.
That's a good slide for you to share if anybody wants it. Oh, wake up, people. It is Saturday morning at 8:09. That rabbit is real, people. This is not a fantasy show. So, why do you do your pre-qualification correctly? Because of all the horror stories you hear. Like, you hear everyone talking about, oh, I never got the house. Oh, my loan went bad. Oh, this takes forever. Oh, you need more money. The loan doesn't meet guidelines at the last minute, which is probably what Vinnie hears at like 2-3 weeks into escrows with a lender doesn't do their job right. Or, oh, you need a cosigner. Oh, sorry, loan costs went up. You hear it all before, Vinnie.
Yeah, you have to think that the National Association of Realtors talks about the idea that 95% of people that buy a property to live in will know in the first 5-10 seconds of walking into it that that's the property they want, right? Now, so let's say you fall in love with the property, we get in a contract, we're in escrow on the property, and then you find out that your lender didn't have all the facts or didn't ask the right questions to get you qualified. That's like getting a knife stuck in your heart right there. It's painful.
Bad.
So make sure you have all the information. And someone says, okay, if they approve you or pre-qual you based off of not a lot of facts and don't get paperwork from you, yes, it might make the process easy up front, but it's going to make the process more painful later on.
And it's what we're doing here is not quantum physics. But if you've done
babies, your daughter reads that?
Yeah, this is what she reads.
Oh my God.
We're a very science and math-based family here. But it's not quantum physics what we're doing. But if you don't do it correctly, getting a pre-qual correctly, or you don't do the proper steps of Vinnie looking for the house correctly, and the contract correctly, you're going to have a bad outcome. Let's see. So next, there are many loans out there. Which one's right for you? Well, that's why we're doing the pre-qualification, because right now in this current environment, let's take a look at the slide. It says minimum 580. Most lenders now require a 680 FICO score. That's changed. I forgot to mention on our market update yesterday, Vinnie, but we dropped her FICO scores back down to 660, which is kind of interesting. So, and then the other thing, conventional loans, 620 FICOs, 3% down, 5% down, 3.5% down. A lot of different options out there. You know, VA loans require no money down, which is the best loan in the business. Thank you all the people for your service out there. And then jumbos is 10% down minimum. You just want to make sure you do the pre-qualification correctly, so we explore all options for the loan that fits your short-term goals and your long-term goals both.
Now, so, okay, this is based off of what happened the last 5 years, okay? Now, I don't want anyone to factor that into their purchasing today. I mean, I think that's one of the roughest things that any agent or any person can do, saying, hey, if you look at the last 5 years, this is kind of how the growth happened. You know, so if you factor that in, this is how the next 5 years is going to happen. That's not the case, okay? We're probably closer to the top end of the market than to the bottom of the market. Yet, if you would have bought 5 years ago, you would have seen what kind of gains you would receive. Now, I do think even if the market does go down, the market's always going to go back up. So if you purchase today, it might not be at a higher price, all those gains in 3 years from now. But in 15 years from now, 20 years from now, it's probably going to be higher than it is currently. All right. So if you buy today, don't factor in what happened in the last 5 years. Maybe factor in the last, maybe, I don't know, 30 years, or kind of just give you a rough idea. Focus on monthly payments.
Yeah, focus on the big picture. Don't look at your home as a piggy bank and something to just pull money out all the time. Average closing costs for a new loan. Well, this is one of the things that everybody, asks you about, and then you want to give them a simple answer so you can break it down. The simplest thing I can tell you is average closing costs are 2.25% of the amount you're going to purchase the home for. Pretty simple math. This takes everything into full play: title, escrow, recording fees, impounds, insurance, everything. And then also there's different closing costs depending on the month that you close. Typically September and October are the most expensive months to buy a home. Your closing costs can be negotiated by your realtor, which is super important that you got a good realtor that can negotiate strong. And lenders can actually help you with your closing costs as well through closing cost credits. And remember, just because you save for your down payment, there is closing costs involved. So please always plan on that.
Yeah, I mean, I think that's one of the things that pops up with VA buyers. I don't hear it as much now, so I'm wondering if a lot of VA buyers are getting more savvy about it. But there's a difference between down payment and closing costs. The down payment, yes, VA, you don't have no down payment. Yet for closing costs, you still have closing costs. So that's something that can get resolved with the lender, with the realtor. You're usually gonna have to have some kind of money to bring to the table, though, just for earnest money deposit. I mean, I have had clients buy a property with no money, basically no money out of pocket. They had to put money up front, and then later on they got the money back. Yet they had to put some kind of money, and I think it was like $700 we did, or $750. So there's some kind of funds that come together with that. Yeah,
there is programs you can use as grants to walk in with $1 and buy the house with $1. It's just right now in this current environment, that's not as likely as it used to be. Will that eventually turn a corner? I'm sure it will. Things will eventually go back to being somewhat normal, I think, except for shaking hands. I think there's a whole new standard on shaking hands now. I think the elbow bump is becoming kind of popular.
We'll see how long that lasts for.
Yeah, we'll see. Very important things to think about when buying a home. So how long are you going to own the home for? If you're not going to own the home for at least 5 years, hopefully 7, maybe buying a home is not the best choice for you. And the next one, what do you think about the next one? Where you buy is important, Vinnie. What value would you put on that?
Yeah, I mean, you can look at areas that are so-called quote unquote being gentrified to factor in basically possible future pricing to a property. If you're buying a single family home, I mean, the things that you have the ability to control is your hyper-focused community but also more so your house. So like adding square footage to your house, adding upgrades to it, those kind of things can really factor in. If you're in a community, again, that's being so-called gentrified, that can help out with future growth. But you really have to understand the community. If you're getting go ahead.
Oh, I'm sorry, Vinny, but you use that big word all the time, and I have a hard time with it. Could you explain what gentrified is for the people out there?
Oh, sorry. So it's the idea where you're having older properties that are getting bought up by like investors, and then they're rehabbing the properties and then reselling them. So usually in an area that's kind of being thrashed, but close to a community that's more upgraded and cleaner, investors start purchasing in those communities, start fixing them up, and you'll slowly start seeing one really nice house, maybe to one really older house, and then one really nice house, one really older house, and slowly but surely the value starts shooting upwards. So it can have a negative connotation. Also, if you own the property there, you can have a positive connotation because you're basically gaining equity into your property.
And then the other thing, when you buy a home, make sure you can sleep at night. That payment, you can handle it. You can sleep at night and still have a good night's sleep, focus on your future, and you still save money. And then, for those of you out there, it's not Newtonian physics, this gentrified thing. Vinny explained it very well. It's basically, it's buying a neighborhood that's up and coming. Would that be easier to say, Vinny, would you think?
Yeah.
Okay, thanks.
Okay, choose the best realtor. All right, now, why you ask? Experience matters. Okay, so check their online reviews. I mean, check their license number. Higher the number means new to the business, rookie. Do they do it full time? Do they own a home? How many homes do they really sell? Experience matters. This is one of the largest purchases you're going to be doing. So do the research. More people do research on the phone they're going to purchase than the agent they're going to use. So don't be one of those people. Do the research, because as you can kind of see, knowing the community, knowing how to put an offer on a property, knowing the price, knowing the terms, changes with agent to agent. So really dive deeper into it. Feel free to Google myself or Google David. You'll see that we have a lot of reviews and positive reviews. So
it's this is one of those things where you always, at least I have people come across and they go, oh, don't worry, I'm going to use my former cousin's uncle's brother's someone, and they just got their license, and they go, yeah, they just got their license, I'm going to totally use them to buy my house. Think about it. It's the biggest investment you're going to make. That experience super matters. Like, you really don't want to gamble on this. This is not one of those things where you hire your brand new person and you hope this is going to be your outcome. It's not. Experience matters. Hire a really good agent. It's worth it.
All right, so now you have the loan set up and you have a great realtor. Okay, so what's next? House size, location, schools, appreciation, price. These are all things that he'll look at when they're trying to purchase a home. So we want to dive deeper as much as possible, get a better understanding of what you're looking to do, what you're looking to accomplish with this purchase. Is looking to get a bigger house because you're having growing families, looking to downsize. Do you want to get into a school district for your child? So we really dive deeper. We did that in the buyer's consultation to figure out what's going to be the best for you. And when we say price right here, again, it really goes towards that monthly payment that you really want to shoot for.
The bigger picture,
So
bigger picture.
So like we talked about earlier today, where you're going to know in the first 5-10 seconds of walking to the property if you're looking to buy the property and live in. We want to make sure that you get the property, you have the ability to purchase that property. So what factors into that offer is purchase price, terms of the offer, fees being split and paid by each party, items to be conveyed in sale, and how much of the E&D is being done. So people usually think, for the most part, purchase price is the biggest item that factors into offer, and it can be for some people. Yet, if one person is offering a 10-day close compared to a 60-day close, right, and there's a difference of $5,000, they might be willing to go with the shorter time frame. It really matters on their motivation, on their need, on their wants, what's going to get your offer accepted. So purchase price, terms of the offer, like we talked about, you have escrow timeframes. It's generically 30 days, but it can be shorter. Contingencies, generically 17 days, 17 days for the loan, for the appraisal and the buyer investigation, the 21 days for the loan. It can be shorter based off the lender you're working for and based off the timeframes you want to kind of put out there. Fees being split, majority of the time you get the seller to take care for the massive amount of fees that come into it, except for lending fees, escrow, stuff like that. But it's all negotiable. Items being conveyed, there's real property and there's personal property. The real property conveys with the sale, while the personal property doesn't convey. Yet, if the personal property is put into the offer, that can convey. So it's really making sure that you know what's conveying and not conveying. And then how much is EMD? So we have on the slide 1 to 5%. I think 5 is ultra aggressive, but hey, if you really want your offer accepted and you're already going to be putting a 40% down payment, 30% down payment, and whatever, it doesn't matter. But for the most part, you're probably seeing more of the 1% earnest money deposit. But it's all negotiable. It's an arbitrary number that both sides agree upon.
And you know, I throw this out there because a lot of people don't realize it, but certain things that Vinnie does to help getting the offers accepted more with clients is take photos of the family, explain the story, show a photo, explain the story. And then the other thing that's super important, a lot of people don't realize, is it's the reputation that the realtor has in the marketplace. So I'm going to use Vinnie as an example. Good reputation. He can talk to other agents. He can work with them better, which in turn increases your odds of getting your offer more accepted. There's a lot that comes into play with your realtor's reputation in the marketplace. And if your realtor has a bad reputation and they're submitting the offer for you to the other agent, your odds just went down. It's super important that your realtor has a great relationship with people in the marketplace because it does help you. I mean, would you say so, Vinnie? What do you think about that?
Yeah, well, I definitely. I mean, there's some people that you're not wanting to work with as much as possible, and other people that you're happy to work with. So there's some people I've come across that make the transaction easier, and there's people that I've worked with that make the transaction harder. And for the most part, all parties are trying to get the property sold. People are trying to buy the property and people are trying to sell the property. It's a matter of facilitating the transaction and make sure that both parties feel comfortable throughout the process. Okay, so what happens next when your offer is accepted? If the seller likes your offer, boom, accepted. There could be a multiple counter. There could be just a counter. It could be a no response based off of how the offer is structured. More than likely, the party selling the home will counter you. Okay, for the most part, sometimes they'll accept it outright, but for the most part they will. This means change to some of the terms. You accept them. Again, it becomes a negotiation on the first part of it. Once all parties, all information is called, kind of agreed upon, then it going forward. Okay, and you open up escrow. So contract accepted. Escrow is open. Instruction is issued for wiring the earnest money deposit. Lender requests fees from escrow and title so they can disclose the loan. Realtors help in scheduling home inspection and other inspections deemed needed to protect you and your investment. Lender orders appraisal to help with confirming values. Escrow sends you a package to fill out and off to the races. Now, in escrow is the time that actually the rate can be locked. Okay, so before the pricing that was given, that's based off the assumption of that market. But once they actually have the property locked up, then you can actually lock the rate up.
That's super crucial, Vinnie, because a lot of people ask you, oh, did we lock in the rate? Can we lock in the rate? Rates change daily, hourly. You cannot lock your interest rate on your loan until you're under contract and you have our property identified. It's super important. And it's also how quickly the lender can get information from title and escrow to disclose our fees. Otherwise, we're just going to disclose to you with the highest unfortunate prices that we think are going to happen because we don't want to lose time. Because the time in your escrow period is super important. As a lender, for every 1 day you delay or escrow delays or title, anyone that delays the process, it costs me 3 days of time.
So yeah, we go over the rest of the stuff. Home inspection. You don't have to get a home inspection, but again, we talk about you're buying one of the most expensive property items in your life, so do the home inspection. All right. The home inspection is going to be a general inspection. if things are called out, we can get a plumber out there. We can get a termite company. We can get a lot of different specialists. But the home inspection is the general inspection. The appraisal. Now, one of the kind of interesting thing in this current climate is some of the appraisals are just are getting waived. Other ones are doing like drive-by appraisals, things like that.
Oh, completely. This environment's changed everything. Like, we're getting a lot of appraisals not even taking place now. And had you been listening to some of our market updates, you would know this, but a lot of appraisals now are being done by the photos and videos online that the realtor posts, which can be an advantage, can be a disadvantage. A lot of things come into play with that, especially if the realtor listing the house is doing not the best job for their client and they don't have the best photos or videos up there, your home may not appraise. So something really crucial to think about as well. The appraisal is super important.
So going back to the home inspection, when the home inspection happens, no property is perfect, but you want to make sure the property is perfect for you. Yeah, it's so funny how these PowerPoints, I get like, so every time I get an email, I get one of those kind of things, I get a notice and then it pops up. So anyways, yes, there's birthdays out there for our Facebook friends. Anyway, okay, let's get back to it. Now, so no property is perfect, but you want to make sure the property is perfect for you. So we'll go over the repairs, and we'll go over the issues with the property, if there are some. Then we'll negotiate again with the seller to see if they want to take care of some repairs, if they want to give a credit. In some cases, we might have to actually do further tests to verify if there's termite stuff, water stuff, plumbing stuff, things to really kind of dive deeper into. But once there becomes an agreement on that, then it's full sailing. If there's the issue and both sides can't come to an agreement, you usually have the ability to back out. That's something you have to talk to your realtor about, but for the most part, you should have that ability to back out.
Ooh, here we go. Loan side. So a lot of people wonder, what's the magic in the box? There is no magic in the box. There's no magic curtain. When we do your pre-qualification correctly, and then you get under contract, our process now becomes pretty quick and efficient. We have processing, which means we submit all your documents. We look for any possible errors. We fine-tune everything perfect, and it gets reviewed by a processor. From there, it goes to underwriting. Underwriting is what Vinnie was mentioning before about the judge, which typically they're going to judge to make sure your lender followed all the rules, all the regulations, all the guidelines, and that your loan meets all the criteria for them to issue you money. Once your loan's approved, we usually have a couple other conditions we send out to you to fine-tune everything again. From there, we go to the all-important number 7, which is the closing disclosure. A lot of people, wonder, what is this? Well, day one, when the lender talks to you and says, hey, we disclosed your file, which means we disclosed the fees, the loan, the terms. Number 7 means it better match. The closing disclosure is a document that was designed back in 2008, 2010, in that time frame, which gives you all the fees again, all the terms again. You look at it, you sign it, and then you have a 3-day waiting period until we can do loan docs. And that's kind of crucial, Vinnie, because with you as an agent, you can ask people, hey, has the closing disclosure been issued? And if the lender hasn't, what usually happens then?
Yeah, we might have some issues popping up.
And then after the closing disclosure you sign your loan docs, and this is important too. So, current environment, what's going on? Everyone's scared. More than ever, it's all about, and you know what, Vinnie, I just thought about it. Me and you are not wearing our mask. How irresponsible are we?
Wow.
Anyway.
Yeah, I think something to really think about too is in different states, you have different rules and different ways the process goes about. So in some states you have attorneys involved. Sometimes you have escrow involved. Sometimes you have the face-to-face where you're signing the docs in front of the other person. Here, when you're the seller signing their docs separately and the buyer signing their docs separately, once the docs are signed, they sent back to the lender. And then the lender, once they actually look everything over, they're going to send it out to funding. Once you fund, you don't take over the property. You still have to actually go into the recording process. So there is steps to go about. sometimes I hear people saying, "Oh, I just signed the docs, so I own the home now." I go, "That's not the case." Okay, well, when the phone just lended, that means I own the home now. No, that's not the case. Once it records, that's when you own the property. So.
And you know what's changed too in our current market, which is kind of unique, is we now are doing digital signings. I know a lot of lenders are not doing this, but certain lenders have moved to full digital signings, which means we send you the docs, you sign it electronically, and then there's literally 7 pieces of paper that a notary will look at with you and sign. And we're actually moving towards a process of doing digital notaries for verification, which means those days of you going to a loan signing will be over. You'll do that at your house by yourself digitally, which to me is that's changing a lot of stuff now. That's amazing.
Yeah, I mean, it's definitely a different time. I mean, I wonder some of the stuff that's got put in effect, how much is that going to stay after everything?
I think it's
level of normality.
I think this right now has just tipped a new point in our industry, is the digital signings, and that will go to digital fundings, which means you will sign the docs digitally. They're automatically sent back, and then you can review them and turn around and literally fund. Like after you sign digitally, you can fund 2 hours later, almost instantaneously, which is kind of a game changer for certain people in negotiations, for the lenders that do it. For the other lenders that aren't able to, step up with the technology, that's going to be a downside, because if you think about it, when your realtor's out negotiating for you and they say to the other agent, the listing agent, "Hey, we do digital loan signing," which means we sign and fund literally within 3 hours, and we can close in 21 days. That increases your odds of you getting the property.
Yeah. Now let's talk about in this market. Okay. Better price, better terms, better property. I mean, the rate of property selling compared to what's going on in the market is actually, gone up a little bit. And we're having less properties hit the market, right, compared to what's selling. So that's something to be very aware of in this market. You can still get good values off it, yet be aware that you're not going to get maybe a crazy good deal on something, yet drive deeper into that monthly payment, because with rates how they sit, you could get a crazy good deal compared to what you were getting a month ago.
Absolutely. That I look at where rates are right now, and I'm anticipating them to stay low for the whole year. Can I guarantee that? No, I can't guarantee. The only things I can guarantee is death and taxes. We all know that, but you can't guarantee low rates. And what you lock in now under the current environment, if it gets lower than where it is now, I think that means the economy is gone to hell in a handbasket. I think things are beyond bad. If rates go lower than what they are now, you're talking about 30-year fixed rate mortgages at 3%, 3.25%, and you're looking at FHA VA mortgages 2.75. That's ridiculous. Like, you're not going to see anything different than that. So that interest rate you can get now is super important. You just got to find the right property for you that makes sense long term for your goals.
Yeah. All right. Well, that is us.
Man,
we're faster and faster right there.
I gotta tell you, I'm and for those of you out there, I haven't been drinking coffee the whole time. There's actually water in this cup because you can't drink that much coffee. But I just don't, because of all the millions of followers and people out there. We can't promote water. It's just part of our contracts. Sorry about that.
All right, guys. Well, if you have any questions, feel free to reach out to us. Follow us for our Mondays and Fridays market updates. It will be on this channel, on our YouTube channel. If you're on Twitch or Periscope, feel free to follow us there.
Thank you, everybody. We appreciate your time on a Saturday. We're looking to get better all the time. Oh, Vinnie, you didn't mention our next seminar is coming up is the investor seminar.
Yes, yeah, the investor seminar. So yes, please be on the lookout for that. We're gonna have multiple different seminars, not just home buying seminars, but investor seminars, a lot of different ones. And if there's a specific topic that you want to be covered, feel free to reach out to us too.
Thank you.